It's an age-old problem for busy professionals in Hong Kong, finding the time to visit the bank during opening hours. But that's not the only reason people here are increasingly banking on digital platforms. If there's one reason Bernard Mock avoids his closest branch at all costs, it's
the queuing time, and especially, it takes time to conduct transactions. So maybe you have to wait for like 30 minutes.
In its new report, McKinsey says bank branches account for just 12% of monthly transactions in developed parts of Asia. Bernard, who works as a finance professional, says it's been 2 years since he visited a branch. Still, many customers do go for transactions they consider complex.
Maybe if I need like sophisticated investment ideas, like if I want to invest in bonds, like I cannot do that in the internet. I have to go to a branch to seek advice.
Willingness to go branchless was just one of McKinsey's key findings. It also found banks in Asia fell short on satisfying consumers with their digital channels. That, coupled with growing comfort with digital-only propositions, has seen an increasing number of new fintech services gain a footing.
You look at the development of online savings platforms, but also challenger banks in North America and in Western Europe. There's been some real success stories.
Britain Timothy Jones left his job a year ago to launch his own fintech business. He says Asia's strengthening regulatory environment is also helping startups like his compete.
It feels like we're just on that real tipping point of change. So I think what we'll see is, yes, there'll be a continuation of new people coming in, but actually the existing banks and other financial institutions will start to develop a huge array of internal propositions as well. Some in partnership with third-party fintech companies, and then some just by themselves as well.
Key for traditional lenders will be down to how they adapt.
They have to actually accept technology for what it is. And even if it means that they have to change a little bit in terms of their client journey and how they service their clients, or how their advisors service their clients, or how the clients service themselves through robo-advisory or other DIY or do-it-yourself tools through an app, that's what they need to embrace, I think, generally.
And getting that right could create even bigger opportunities. Patrick Fogg, TRT World, Hong Kong.
Rebecca Bundhan in Mumbai spoke to McKinsey's senior partner, Renny Thomas. He gave more details on how digital banking is growing across Asia.
The idea of branchless banking seems to be catching on. What's that going to mean for traditional lenders?
The use of digital, both for actually reaching customers and using the data available to make decisions, is going to go up dramatically. So the role of the branches in some ways will get limited in many ways to a smaller set of transactions. But of course, in terms of branding, presence, customer permanence and so on, they will continue to play some sort of role. And I think if you look at the developed part of Asia, this movie is in some ways already played out. So in the more developed parts of Asia, putting in markets like Singapore, Hong Kong, and Australia, you find that this movie has played off to a point where at least 80% of the customers are actually either moderately or very actively digitally active. And you are actually seeing a situation where the role of the branch has got even reduced even lower. India in some ways started from behind, even behind relative to other emerging markets. But in the last 3 years has actually leapfrogged. So you'll find that much greater use of technology, much greater use of data, in a way that we actually think that 3 years from now, we probably find at least the urban parts of India leapfrogging even the developed parts of Asia in terms of use of digital and the use of data, given the new architecture we have in place in India.
How do you see lenders capitalizing on the opportunities afforded by digital banking propositions?
In some ways, the key things for banks is that while digital is an unstoppable wave, how do you make sure your investments are more purposeful to give customers a better experience and therefore have a better net promoter score and also a higher level of loyalty? Because that's the way you get the payoff in your investments. If you look at the future, it does look increasingly that parts of banking, if not large parts of banking, could get embedded in ecosystems. So whether these are consumer ecosystems or B2B ecosystems, the ability to actually embed banking into those ecosystems will provide both a source of ready data and also much lower cost access. in some ways, it's a little bit like saying that nobody wakes up to actually get onto the banking app. But if you were to embed, the banking services naturally, for example, a payment into a marketplace or into an e-commerce website, that's a more natural way that banking could get embedded.